Imagine a modular blockchain flipping resistance while the ecosystem quietly racks up millions of real-world asset users. That's Celestia, trading at just $1.60. While the chart flashes oversold, I'll bring you 6 bright profit targets up to $13. In the next few minutes, I'll show you why a simple weekly candle close could ignite a 6x move, how CLOB encryption, roll-up demand, and a $220 million total value locked Plume chain are fueling the story, and exactly where I'm trimming on the way up. Missed the last modular run-up? This is your second shot. Buckle up. Celestia might be the best risk to reward you'll see this month. Celestia isn't just another altcoin. It's the first data availability layer purpose-built for the modular era. Rollups post their data here because blobs are cheap, fast, and scalable. That means when a gaming chain mints 1 million NFTs or a DeFi app fires off order book updates, the load lands on Celestia. In a market hunting for real throughput, that narrative alone would be enough. But Celestia's supply dynamics and chart structure sweeten the deal. Cut to the colorful donut chart. Only 60.6% of tokens are unlocked. Yet, over 27% remains locked and 12% is still untracked. Translation: the circulating float is 688 million TI tokens. Tight for a Layer 1 narrative that just scored its first killer apps. Scrolling to the unlock schedule, notice that the steepest release already hit 8 months ago. The curve ahead flattens into gentle steps. The market has digested the heaviest cliff, leaving a predictable trickle of supply. Exactly what trend followers love. At a $1.1 billion market cap, every million in new demand moves price faster than most megacaps, yet there's no ticking time bomb cliff hanging over us. That's the subtle tailwind many traders ignore. The X-Profile Swiss Trader 09 marks a golden support box between 139 to 143. Hold the box. Price rips, he says. A day later, OmniCat Crypto zooms out, tracing a year-long downtrend line. Price just poked through, confirming a double bottom retest. 2 independent traders, 2 time frames, 1 message. Bears are losing grip. Now, the heavy artillery. Our weekly chart. Candles have respected descending trend line since January. The first test is the shorter line overhead. Break that, and the February 2024 all-time high trend line becomes the final boss. Meanwhile, the Heikin-Ashi RSI indicator is buried in the basement. Levels last seen since July 2024. Layer on the VRVP on the left, and you'll spot a fat volume gap right above $2. Less friction, more velocity. My invalidation is simple. A weekly close under $1.19, and I'm out. That's a 25% risk for potential 6x upside. Rare symmetry in crypto. We'll come back to the chart in a moment. First, let's put it into context. On-screen Nick White's thread about on-chain CLOBs. Central limit order books churn tiny messages. Perfect for Celestia's data blobs. Sambatinelli research shows a single VIP market maker pushing 100 million orders daily would spend only $2,200 in blob fees. Peanuts compared to centralized exchanges raking 32 to 126,000 gross per VIP per day. If even 10% of Binance high-frequency flow goes modular, Celestia captures the data fees. An underhyped revenue pipeline. Look at the chart of activity by namespace. Month by month, colored segments stack higher. Eclipse, Derive, Plume, Orderly, and Towns. Nick's caption nails it. In crypto, growth trumps everything, and Celestia is literally built for growth. Each namespace is a bet on specialized throughput. Together they compound demand for Celestia fees. Plume just crossed $220 million total value locked, topping 93,000 RWA holders, dwarfing Ethereum and Avalanche. Why? Cheap data. Every mortgage-backed NFT minted, every yield-bearing token updated. Celestia hosts the proof. Wall Street is flirting with on-chain ledgers, and Celestia's modular design puts it in pole position to be the spreadsheet under the spreadsheet. Here's exactly how I'm trading it step by step. I'm already long from $1.58, and my parachute is a simple rule. If we close a week below 119, I'm out. From there, the chart hands me 6 clear rungs on the ladder. First comes $2.20, about 39% up. If we tap that, I lock in 20% of the position and pull my stop to break even. Next is $3.30, the shelf where price last unraveled. I bank another 20% there. At $5.80, a key Fibonacci 236, the crowd usually gets loud, so I trim another fifth. If momentum keeps pushing, 870 sits at the 382 fib and a fat volume node. I clip 15%. $11 is roughly halfway back to the all-time high, so I shave another 15%. The final target is 1330, right on the golden 618 retrace. Anything left after that is the moon bag, free to ride as long as the candle bodies stay green. The beauty here is psychological. Every target pays me to stay rational, and each trim lets me tighten the trailing stop. Worst case, if we never touch target 1, I drop a single risk unit. Best case, if every level prints, the compounded reward to risk pushes past 6-1. Unlocks may be gradual but still dilute. A black swan roll-up exploit could crater demand. And yes, Celestia is an inflationary asset until staking offsets issuance. None of that negates the asymmetric setup. It just means risk management isn't optional. That red-dashed stop-loss isn't decor. It's survival. Celestia's own account sums it up. The ecosystem's been cooking. Encryption added to Hibachi, Derive Pro trading live, towns crossing 1.4 million memberships, ethereal testnet launching. Each headline shouts the same thing. Builders are shipping here. If this weekly candle closes green above the shorter trend line, expect crypto Twitter to wake up and chase. When that happens, fees spike, Namespace's fight for block space, and Celestia's reflexivity kicks in. You now have the map and the milestones, trade it or fade it. But don't say you never saw it coming. Before you jump, a quick word on execution. I'm trading Celestia on MEXC, the exchange 10 million users trust for deep liquidity on 1,400 plus coins. Including the low-cap modular plays that explode before the majors even list them. Sign up with my link in the pinned comment and you'll unlock up to $8,000 in starter rewards, 600% USDT 2-day staking, fee vouchers, futures credits, even a funded Bitcoin position. The fastest way I know to test drive a trade idea without bleeding fees. Deposit just 100 USDT, trade it once to meet volume, and you trigger the unlocks. Fresh bonuses drop daily, and you'll save up to 20% on every future order. I've been on MEXC for a year. 0 withdrawal headaches, blazing fast fills, and some of the juiciest airdrop campaigns. If you're committed to squeezing maximum ROI from this market, grab the rewards, lower your costs, and thank yourself later. If you found value, smash the like button so the algorithm pushes this to more builders. Drop your own Celestia price targets in the comments. I read and reply every take. Subscribe with the bell so you never miss another asymmetric setup. And if you're hungry for more, one of my last videos on Polygon Zag Layer roadmap is waiting on the end screen. Watch that next. Remember, markets reward conviction backed by risk management. Trade safe, think bigger, and I'll see you in the green.